Hello, everyone. I'm Bahman Hadjiannia, Head of Business Development at BEF Biosystems, and I'm here today to talk to you about impact investing. So, I'm going to start with this quote. Impact investing has become a broad umbrella that includes all investing with a focus on both financial return and social impact. But in its best form, impact investing prioritizes impact over returns and achieves outcomes that traditional investing cannot. What does that mean? That means that people who are involved in impact investing are looking for generating through their money a social or an environmental impact. So making our lives better by enhancing potential of companies that actually have a focus on the environmental problems, environmental issues, or the social issues, which are at the moment very pressing in our daily lives worldwide. And my next slide will show you what the United Nations has gathered and decided that they have to tackle 17 major problems which are creating inequalities and unbalances in our world today. First of all, being no poverty. So you see on my slide number 3, there is no poverty. Number 2 is zero hunger. Number 3 is good health and well-being. Number 4 is quality and education. Number 5 is gender and equality. Number 6 is clean water and sanitation. Number 7 is affordable and clean energy. Number 8 is decent work and economic growth. Number 9 is industry innovation and infrastructure. Number 10 is reduced inequalities. Number 11 is sustainable cities and communities. Number 12 is responsible consumption and production. Number 13 is climate action. Number 14 is life below water. Number 15 is life on land. Number 16, peace and justice, strong institutions. And number 17 is partnerships for the goals. Impact investing is one of the solutions that the financial world has found or thought about to tackle at least all of these problems, if not some. Impact investing is marked by an intentional desire to contribute to measurable social or environmental benefit. Impact investors aim to solve problems and address opportunities. This is at the heart of what differentiates impact investing from other investment approaches which may incorporate impact considerations. Number 2 is use of evidence and impact data in investment design. What does that mean? It means that investments cannot be designed on hunches and impact investing needs to use evidence and data where available to drive intelligent investment. The intelligent investment design will be useful in contributing to social and environmental benefits. Then number 3 is manage impact performance. That means that impact investing comes with a specific intention by the investor and necessitates that investments be managed towards that intention. Meaning, if I want to invest in a company that is going to make my environment better, so that's my trigger, that's what I want to do, that's where my money is going to go. But I need to use evidence and data that explains to me that that proves to me that my investment will actually generate an environmental benefit. This includes having feedback loops in place and communicating performance information to support others in the investment chain to manage towards impact. And the fourth, the very important pillar, is contribute to the growth of the industry. Investors with credible investing practices used shared industry terms, conventions, and indicators for describing their impact strategies, goals, and performance. It has to be an open architecture, it has to be an open source. I have to be able to share my experiences with others. Moving forward, who are the main actors or who are the people interested in impact investing? So obviously fund managers, then developed financial institutions, diversified finance institutions and banks, private foundations, pension funds and insurances, family offices, individual investors, NGOs, and religious institutions. So now I'd like to tell you a couple of facts about what the impact investing hemisphere is like. First of all, the market is very diverse in the sense that it goes from environmental issues, so from agriculture up to fintech. You can be an impact investor investing in technology, investing in agricultural machinery. You can be an impact investor investing on food, on energy. So that's why it's so diverse. Then the impact investing industry is growing according to the Global Impact Investing Network. 1,300 impact investors worldwide, more or less, growing. Maybe this year, and due to the pandemics, it's going to be a little bit less. We don't know yet. We'll see. Impact investors demonstrate a strong commitment to measuring and managing impact. They are willing to understand how their investment is actually generating impact by measuring it through metrics and managing it on a day-to-day basis. Impact investors report performances in line with both financial and impact expectations. That means that you're investing in companies that actually give you a return. They actually pay back, which is what most investors are looking for too. Impact investors acknowledge remaining challenges that need to be addressed within the industry. So most investors, like myself, we look to invest in industries in which we also understand what challenges are needed to be addressed in order for the industry to grow. I hope you understand that. And then, according to Deloitte's Millennial Survey, talent, like young people like you, talent is seeking a job with purpose and meaning, where they are treated equitably and are integral part of something bigger than themselves. I'll give you a couple of numbers just for people who are interested. The current market value for impact investing, as I said before, is 500 million. There's 1,340 organizations managing these $500 billion. 229 entities amongst family offices and ultra-high net worth individuals and institutional investors hold around 230 billion. Most impact investors are in America and Canada. And then there's a little bit less, like 20% less people are investing from Europe. Italy is still very small, but we hope we're going to grow steadily. 64% of the investors are looking for a substantial return. 20% of them are looking for some kind of return, but not such an important figure. And 16% of them are just interested in preserving capital. That means if you invest $1 million, that $1 million stays $1 million in 5, 6, 7 times when the exit is planned. And the geographic focus is 45% in emerging markets and 42% in established markets. So now I want to talk to you about what challenges this industry is facing. So the biggest challenges are liquidity risk. That means that many direct impact investing opportunities don't have an exit strategy well defined. That means that investors put money into companies, but they don't know how or when they're going to take them out. The second aspect is fundraising risk. Obviously, managers may be slow in raising and investing capital due to early stage constraints of impact investing market. Manager risk, well, that's obviously, it's quite obvious. I mean, there's the risk of execution in every kind of business, not only in impact investing. In every business, there's always a big risk of execution. So it says here, many managers in impact investing lack track records, have smaller asset bases and portfolio breadth, and high turnover due to lower compensations. So it's true. Working for startups doesn't pay you much money, so you have to wait to be rewarded in the future. Measurement and reporting risk. Measuring impact is not so easy. And then impact risk. The investment may not produce the desired impact at the end. That means that there's some companies which don't fulfill their expectations. So I want you to have a close look at what my references are, what my references are, because this is very important, so that you can you can look into, if you're interested, you can look into all my documents, so that you can make yourself an idea of what impact investing is. And I hope you're being so young and hopefully being very optimistic about life, that some of you might be embarking in impact investing. So thank you everyone very much, and for any questions, just drop me an email, and I'll be happy to answer all your questions.